Hi, this is Randy Finney with Right Side of the Chart, and today is Thursday, November 20th, 2025. It's 2:44 Eastern Time, so I'm starting the video. Figured I'd do one more. Comments have been virtually non-existent. Got a couple things today, but not much. Um, anyway, there's a lot to note in the charts right now, and what I'm going to do in this video, other than a very brief update on the equity markets, I'm sure I've covered this ad nauseum lately, but today's reversal is something. It meshes with exactly what I was saying recently, including as recent yesterday's video. I highlighted the bullish divergences on the 60-minute chart and said in a bull market, when you get a correction, that's usually the catalyst for the move to new highs. However, and that's a big if still, there's a lot of long-term indicators that are still bullish. We need some more evidence. I'm going to go over those real quick, just the near-term levels. But if the sell signals that we had in the last several weeks, including the breakdowns and backtests of the primary uptrend lines, the bearish engulfing candles on SOX, SPY, QQQ, if they prove to be put in a more significant top with a lot more downside to come, then this is exactly what I was talking about. How you had the 60-minute bullish falling wedge, you get a breakout, and then what I said is recently as yesterday, in a bear market or a bigger correction, it's bull fodder, bull bait, if you will. Just as these breakouts start to look good and feel good and smell good, boom, they get sold into. So that was, it's worth noting that wasn't on news. That just shows you how heavy the market is. Like I covered in the earlier video, NVIDIA couldn't hold, blowout quarter, everything expected. It was up big after and then couldn't hold those gains. So it shows that, again, the market's heavy. There's just, when stocks stop going up on good news, and especially when they start going down on good news, that's usually shows you the top is in, or at least a near-term top, because you have I always say when the last bull has bought his or her share, no matter how good the fundamentals are in a company, no one's left to buy. And again, I'm speaking metaphorically, not literally, but you get the point. So we'll see. Now, more importantly, to the point, we are once again testing. T1 is also the key, what I believe to be a very important October 10th low right there. And we're testing that now. Remember, we already came close enough to effectively test it yesterday. In fact, we're there now. SPY is also holding just above. The low on SPY was that day on October 10th was 652.84. So I put an alert if we cross down below 652.83. And again, based on the technical posture, whether it happens today, tomorrow, or a couple weeks from now, I think it's the most likely scenario. And things will probably happen very fast. And there's a reason for this video instead of just repeating the same thing. Well, first of all, I still like the VIX. You can trade the VIXY if you want, or VXX, any of those VIX ETNs. I like the futures. And, it's woken up. As I said, I've covered the VIX quite a bit. So just remember things, if we do get those breakdowns and they stick, I think it'll be a quick swoon down, which is better than a 5% drop, I think, to my next target, T2. That's just the daily chart. And then again, I will continue to turn my focus to the weekly chart. Those targets remain. That's a 5.5% drop if it's hit. And again, I think it'll be in very short order, and that's why I do these videos. Maybe we don't. Maybe we bounce. Maybe we go to new highs. But that would be another pullback to test the 200s and price support. If we cut through there, you have the 200 simple, and then you can see my next support here. I might as well turn these levels on now since they may come into play again if we take it out. But let me cover another sector, and this is relevant to the market, and that is the broker-dealer sector. IAI is the ETF. If you want just a simple one-size-fits-all broad exposure, I've been covering this recently. It's been in a trading range, making ever so slightly marginal new highs, still being divergent highs, and it's now, as of today, broken down. I had a price alert go off on it. We have 168.63 is the bottom of that range, and did a video. Here are your companies in IAI. You have your Morgan Stanley, Goldman Sachs, Schwab, S&P Global, Robinhood, CME, ICE. The big exchanges, Coinbase, NASDAQ, all of them are there, interactive brokers. And so we're going to go over this because, again, I shared it as a trade idea. and it's triggered. However, keep in mind, it's okay. Yes, it's broken down, but you have SPY and QQQ right on support. And what do I say all the time? Support is support until and unless broken. So patient and get a little more, 0.5% or so downside. Boom, we should pop it. And especially on a daily close, even better. And like I like to say, the redder the better when you get a breakdown. Meaning, if QQQ closes just below, or SPY does, yeah, it could stick. Could certainly build on tomorrow or in the overnight session, but just means that the redder the better. A big red candle right through there, especially a solid close. And I'm talking, of course, on SPY and QQQ as well as this one. That should be lights out for the sector. And again, it's the technical posture that tells me whether today is the day, which right now we're under the trend line, or a few weeks from now, it's most likely going to go. Last time I had and highlighted it for you, divergent high on the IAI, that's negative divergence. There was your sell signal, took out that trend line, and the total correction in the broker-dealer stocks then was 26%. So we're going to go over them. I'm going to start with my favorite because I think this is the poster child of brokers for the nouveau traders, the younger generation, Gen and whatever, the XY, whatever, the millennials, they all, Robinhood, you can trade on your phone. It's, same folks typically open a Robinhood account or chock full of Bitcoin and other things. And I highlighted that right here recently, a couple times, September 30th. So we're talking less than a month ago, a couple weeks ago. September 3rd. Okay, so a little over a month ago, less than 2 months ago. Highlighted that, and I'm just going to hit the, let me mute it, and you can see the coverage. So here's Robinhood, and oh yeah, a lot of these, I really like this one, and I'm just showing you the video as it's going here. You can read my annotations for the video, or just click and check the video. Oops, I did something to pause it. Okay, so what I said there, and it had just broken and back tested. You can see my targets, and I said as I see it coming down to this one, about a 70% drop, as you could just see there in Robinhood. And so I'm going to cover that one, and then the whole sector. There was the September. There was the end of it. Was the 30th. What did I have here? Okay, that must have been the trend line there. Either way, breakdown 2, back test, breakdown, back test. This level they've already reported, so you can see the little E, earnings are out of the way, took out this 117.42, and I still maintain that longer term, this downtrend line right here, which from where it's at now would be a drop if hit, again depending when we get there now, still about another 52% downside to go. But let's go through them all, and in this, so I'm always playing that game of chess. I'm always stitching things together in different sectors. Before the media was talking, even mentioning private credit, and before most people even knew what a BDC was, I was highlighting that as the next shoe to drop. That's already cracked. It's done, in my opinion. And everything I predicted has come true now. I'm reading that private credit companies now are fighting against each other because they realize one of the problems when the roaches started popping up with First Color and Tricolor and First Brands, that a lot of these companies have multiple private equity loans, or private credit companies have loans with collateral that are pledged from other loans, and sometimes 3, 4, 5 times over. And so now they're all kind of saying, uh-oh, if the shit continues at the fan here and there's more roaches pop up, more bankruptcies, our collateral is not good. We're going to have to find who's first in line. If a company has X amount in debt and a loan, and but they've pledged that collateral 5 times over, who gets it? So, and what this is doing, no matter what, guys, like I said, it just tightens lending. It's restrictive. It tightens lending standards. They're really looking into there now. And again, that's old news. We already milked that one down. If you're new to the site, we milked it down here. This was the the level that I said would trigger the sell signal breakdown. Gave you 4 price targets. We hit the fourth, covered, went long. Gave you 3 targets on the way up. When we hit the second one, I said, nope, we're not going to T3. I'm canceling that. That's the final target. It's probably it. We're done. And boom. So hard to call that one down any better. And again, more importantly is what it means to the credit markets. And I'm starting to see the uptick in credit spreads. So now, what's the next thing I'm predicting? If we start to take out those support levels I showed you on the markets, and we head down to the next targets, selling begins to accelerate, what you're going to see, and these guys are really in a pickle. The big brokers, including Interactive Brokers right here. I gave this one as a trade idea for you. We're coming up on T1. What happens once volatility starts to spike up, and we already see the implosion of Bitcoin, which is the first first bubble. Before the AI bubble, there was the Bitcoin bubble. So there's multiple bubbles running right now. And so what I predict will happen when, again, got to have the little more volatility in the market. VIX needs to perk up a little bit more. When it does, you're going to get notifications from the brokers. Interactive Brokers is quick to do this. I've been with them for decades. They'll send out a notice. All of a sudden, they're going to tighten margin requirements to protect their ass. Because volatility is expanding now, and you have the NASDAQ 100 going up and down 3, 4, 5% a day. The VIX going crazy, Bitcoin going crazy. And so to cover the firm's ass, they then tighten up, restrict margin on their customers, increase the margin requirements, which then further exacerbates that margin-induced sell-off that I've talked about. Again, if I don't have the chart queued up, I have it here somewhere. Here, I'll give it to you. This one right here that I've been talking about, FINRA margin debt. Margin debt right here in blue, going parabolic like it always does, tends to coincide with market tops. And as I talk about, it's a vicious cycle. On the way up, if you're wondering why the stock market's been so strong since tariffs, all the economists were wrong. I didn't think it would go as high as it did. Well, it wasn't just, earnings had held up and so far, and a lot of economists, they told you all along, there's a lag time before that happens. Plus, Trump has cowed down on just about everything, so there's that too. But this is it, guys. The Fed's always trying to juice the market whenever they can, inject liquidity, and they've resumed liquidity injections since the government shutdown resumed or ended. But this is it right here. Margin interest is it's a creation of money. And so when the market's going up, buying begets more buying. Sellers account holders can buy more and more NVIDIA and Bitcoin and whatever they're getting chock full of. But then when it goes the other way, that same exact thing happens. They get a margin call. They have to sell something. If they don't, their broker will do it for them. It's very, very simple. And then you get a collapse in that whole creation of free money and liquidity that was created from more and more people borrowing from cheap rates from their broker. That goes in reverse. And then, like I said, if I'm correct, when we get to that point and the brokers start tightening margin requirements to protect themselves, it further exacerbates it. So we're not there yet, guys, and we may not be until next year or whatever point. So I'm just trying to get this all out ahead of time in case it does. So these are still the targets. And, if you start seeing the brokers get down here in my deeper targets, and I'll make these official targets if that happens, then if the brokers are in trouble, the stock market's in trouble. You can overlay the stock market and the brokers. They go together. So let's start back again with IAI. I'll run through the components real quick. So you can see these are I've had this chart marked up forever. I've been trading, long, short, the brokers and this ETF. But this is first target there, second target, third. We'll just focus on those for now. We'll see if we can get some traction going. Morgan Stanley needs to take out 158.14 right there. That's price support, or what I call my BOD, benefit of the doubt support level. This is the uptrend line. It's a price channel right here with a divergent high, but that's nice price support there. And once that goes, the trend line will have been taken out, and Morgan Stanley is going to drop down here to 145. And so about an 8% drop. Get the 200s below there. It could go on down through there to this next target, 135.75 or so. And so one to watch. Again, I like to set these alerts when I do these videos, and they don't go off this week or next. Hey, the broker dealers are hanging in there. So watch for SPY QQQ to take out the recent lows. Watch for these guys. This is a key sector as well. Not a lot of eyes are on it. Probably doesn't get talked about a lot on Bubble TV, but there it is. Beautiful little divergent high. That was a divergent high too, right here. I've covered these guys in the past. We had a little, well, we had the primary trend line. Let me start here. That was a bearish rising wedge. They broke down, and just like the stock market, they certainly had a correction, an initial leg down. Another pop, marginal new high, still a divergent high, and now needs to take out this second trend line, and then this is the big level. So I'm going to set the alert right here, 753.37. All right, that's Goldman, and then where to? Minimum, just like the stock market, minimum come back, test the 200s, and when the if and when the 200s go, then we're talking. That's where again I did the coverage on the weekly charts today and give you longer term targets to map out where things I believe are going in the coming months to years. Schwab, again, the story's the same. Everything but tech. Put in highs already, and most sectors are off those highs and have been moving down, bearish rising wedge breakdown. It's just been a slow roll so far. It's like the analogy of a super tanker at sea making a turn. It's not like a speedboat that's going to make a quick, sharp turn. They turn very slow, and that's kind of what it looks like the market's been doing so far with this multi-month kind of grinding down. Some sectors making a ever so slightly marginal new but still divergent high and then going down, and others already peaking and starting to move lower and just need to take out the next support levels. You can see on this one I had a minor uptrend line there. Probably would have covered it in your last video. And it broke down the other day, last week, and back tested, or on Monday maybe, back tested, and pretty impulsive rejection today. SPGI, S&P Global, breakdown. Again, all these were already covered, and this one just continues to play out. If you go back to those previous videos, this should have been the target I covered you. The second target, I gave you 1, 2, 3, probably at least 4 down here. And so they're playing out as expected. And the majority of investors, and I listened to CNBC. I turned it on today to see what the swift drop was about, if there was any news, and it wasn't. That's what, to me, makes it more bearish. If there was a headline that caused a knee-jerk reaction, those usually get gobbled back up. This was pure raw selling. Hedge funds, institutions, individual margin calls, it doesn't matter to me. It was natural selling, that big reversal today. And all the while I'm watching, this sector, top. It's a very clear top. It's already down. That target there was a 14% drop. And what happens if you cover there, then you wait for a bounce back to resistance, that 505.43 target, and yep, you got it, the 200-day moving averages. Objective reentry, next stop down here, and there. Robinhood I already covered, and again, covered that recently. Got a lot of downside, a lot of meat on that bone. CME peaked here. That was a divergent high breakdown, and again, most people just don't have patience. I know, and I don't mean to poke on this. Somebody last week or earlier this week, remember someone asked about the Apple and the 2 trades. And look, we're just entered those. They were both well within their, below the stops and not yet to the first price target. Some trades play out like that. When you break down, you get a sell signal, and others take a while to get there. And a great example I just gave you was our Visa short. Be patient. Sometimes we shorted it one here or here. This was T1. We hit my first, second, third target, and then we danced on T3 for months. And then finally it gave way along with the trend line right there. And then boom, just like I expected, a swift move down to hit the 4th target. And now that the primary trend line's gone in the 200s, I have a high degree of confidence my next 2 additional targets will be hit. Given us, again, I have to remember, I don't know exactly the short entry, but it'd be roughly a 20% drop. All right, back to IAI, and we'll wrap this video up in case anyone's watching it today. CME, ICE, did I cover that? MCO, Moody's. Look at that, beautiful, beautiful support. Drops going down to 435. That would be a 7% drop. Remember, we already had the wedge breakdown, little kickback rally, and it's been holding on that 468.39 target I created all the way back on January. What was that? July 2nd. Sorry, July 2nd. Probably when I found the wedge. First highlighted the wedge too. Coinbase. Yeah, these are the kind that are just this, the speculative crap. Including Bitcoin. I know I give you a long trade idea. Take it, don't take it. I don't know if it'll pay out or not. The Bitcoin's in distribution mode. And the kiss of death was the when they approved the Bitcoin tracking ETFs that were all rolled out last year. So there's Coinbase Global. Danced on this target here for a while, 294.08. Took out the 200s. There's an example, exactly what I was just showing you in the other stocks. A swift move, exactly what Visa did after it consolidated and danced on support for several months. And then once that support's going, I expect the stock market to do the same thing if and when those recent lows that we're testing today are taken out. And we tested yesterday. And so there it is. Coinbase is at my 232.83 support. After that sell signal, next support target there. Next one after that right there. I could probably even pull that line down a little. Be about 148 for total since the breakdown. Total drop of about 56%. NASDAQ, divergent high. Sell signal on the breakdown of the trend line. Moving lower. Like so many things currently testing a 200-day and price support. Once those 200s go, the stock will most likely continue lower. MSCI, big sloppy mess, looks like an EKG, better fish to fry. RJF, Raymond James Financial. The other thing, we're not there yet, guys, and we may not be for a while, but keep an eye. Especially if you have a smaller broker that you have money with, look at their charts because that will often tell you if there's problems. Right now the charts are solid, the financial system's solid. There's unless things start unraveling real fast. But if you see a certain broker that's doing this when the rest are not, that one has problems. Been able to spot regional bank failures, seeing that in one broker a few years back I pointed out how there was a tell before it blew up with it was dropping, the whole sector was holding up. And then boom, they came out. They had they blew up, liquidity issues, whatever the problem was back then. I can't even remember the name. Uptrend line break, sell signal at support now. Taking out the 200s, 1, 2, 3, next 4 targets right there. Giving this one another 23% downside. LPLA, divergent high. A lot of these, again, just like the video I did earlier, I'll turn my focus, to the weekly charts to kind of figure out where they're going to go longer term. These guys appear to be just ending a bull, most likely like the stock market in late stage bull market action. So when you trigger on a weekly chart, when you take out a trend line that comes off the 2020 lows, yeah, you're probably going down here. So if you want to know where I think the stock's going before all is said and done, here, and that's going to be a drop of 45%. And I promise you, if this stock LPL investments drops 45%, financial markets are having problems in the stock market, and it may never get there. So just works. These things are incremental, guys. Like Interactive Brokers broke support. I gave you that one, S1. That would have been covered in that video or other videos since. Took out S1. That opens the door to T1. Once that's taken out, you've got the 200s in between now, T2, T3. And again, I will decide and if the markets break down, which is probably what it's going to take to get these guys down here, then I'll remove the potential, and that means their current active T4 and T5. That T5 is going to come into with the longer term uptrend line right here. Comes off the early 2020 lows. So boom, like that. So that gives this one, from the breakdown point, a total profit of about 53% on a short. But of course, there'll be some counter trend rallies to game in there if that plays out like the way I think it will. CBOE, I would have highlighted it here on the break there, and all we did, just like the market, little marginal new high, no change, still divergence just grows larger, setting the stage for a larger drop. Still needs to take out this uptrend line. That's a big one. Set an alert on that one, because if and when that's taken out, and then the BOD support, you have price support at 231 plus your 200-day moving averages. So that's the first support that'll probably do the trick, and it'll be lights out under there because the 200 days and this shelf of support we've been dancing on will be taken out. Should be a quick move down to these targets here. TW Trade Web already peaked out after that divergent high. Something's going on. Again, these are a lot of the, a lot of these stocks have long since peaked, and this one's down, dropped already about 33%, cut in third. And that doesn't bode well with the stock market being near all-time highs. It just shows you, that it's an unhealthy stock market. That's what, just like we peaked here, and then you sell signal, and you get a little kickback rally, back tested, and before all said and done, last time, and it was just a correction, was a 50% drop. HLI, Houlihan Lokey. Bearish rising wedge, beautiful. Again, all these covered before. Breakdown, bounced off that first 188 support. Has since taken it out, also took out the 200s. I don't see, it's a lot of thin air down to the trend line. And this, 138.41 right there. Why? Reaction low, reaction high, price support. So maybe overshoot the trend line on the way down and then come back and hold around it, or we'll see. SF. Stifle, divergent high, just extended the line, just like that divergent high, drop, divergent high, drop. EVR, Evercore, divergent high, sell signal on the breakdown, back test, rejection, drop. Divergent high, breakdown, sometimes you back test, sometimes you don't. It's just like Almond Joy. Sometimes, some people like nuts, some don't, whatever that theme was. For the commercials, that little jingle. So like I said, sometimes you break down a back test, sometimes you break down, you don't look back. But you always have counter trend rallies. You zigzag down, bounce off the 200s. Once you take those out, you have support here. My target at first target at 259. Take that out. Give you the next target. I'm going to move that up. JEF. Boom. Again, that would have been covered in that, most likely in that September video, end of September. Broke down, and there's an example of just a quick drop with no back test, 25%. So just, most likely heading lower after this consolidation, rejection off the 200s. It's testing now. FDS. Divergent low, but again, like I often say, bear markets are paved. The path to a bear market low is paved with positive divergences. Just like in a bull market, you get a lot of negative divergences, and they often are good for quick pullback trades, but quite often they break down just as they look like they're getting some traction to the downside. The buyers step in and buy, and you'll see that with these divergent lows in a bear market. Morningstar at support. Downtrend line. I mean, some of these you might like. If you're bullish, I just showed you one. This one also has positive divergence at support. But this was the sell signal here. A big divergent high. Tested the 200s for a while, lost them, got rejected on the back tests here, and boom, bear market stuff. MKTX, I highlighted this one as a potential long trade. They tend to do well when treasuries are rallying, but we still have a short on treasuries. So it broke out. It's down here. Again, positive divergence. Maybe it pans out or not. I don't know. But it's certainly in a bear market. Look at that thing topped here. And this is what a bear market looks like. And this is a good example. These are all divergent lows. These are all nice high double-digit rallies. They end with divergent highs. These are, again, bear market rallies. One day we'll be doing this same thing in the stock market, hopefully. PIPR, Piper Sandler's company, divergent high, then a breakdown, drop, divergent low, rally, divergent high, breakdown, and more to come most likely. LAZ, Lazard, divergent high, drop, divergent low, rally, divergent high. Well, no divergent. Yeah, pretty much equal lows there. Divergent high, breakdown, and next targets there. I could go, I'm just going to click the rest as I go down the list. These are smaller market cap, but they're all singing the same song. All these charts look almost identical to me with divergent highs. Almost all of them already broken down on sell signals. Some testing the 200s right now. Some already have lost the 200s. Some already lost back tests that got rejected. So it's just some of these are ahead of the other ones in their bear market. All right. BCG group. Not one of my favorite charts. PJT partners working its way down, holding the 200s right now, testing those in that 159.54 target. Next stop 154.24, and if things get ugly, much lower. All right, this is the last one. DIFN, Donnelly Financial. That's it. Divergent high. Big support there. Lost it, dropped, put a divergent low, like so many things on early April lows. Nice rally, and I wasn't following it then, but put in a divergent high right here, and continued to resume its downtrend. A lot of swings, a lot of big moves in this one. This is swing trader's dream, these kind of stocks, but and it's bounced off these levels. You know, a lot of these are created. This was created back in April of 2024. So long before we even broke it. When we broke it, again, I had made that trend line back. I put that support level here, knowing that would be a key level. Broke. If you move fast, this is like the stock market, I believe, in certain things. If we do get that, I posted my Hindenburgs, fired additional triggers. My NASDAQ, custom NASDAQ Hindenburg omen. So we could, I know everyone talks about how, bullish seasonality is now, Thanksgiving week. I know that 9 times out of 10, the market's up, and so many times it rallies into year end and may do it. But the times when it doesn't, that's when it's can really catch people off guard. So, I don't trade seasonality. I don't trade the stock market almanac. I trade the charts because, you can look at patterns and, but every now and then, again, if the charts tell you otherwise, that's probably the way you're going to go, despite what the seasonality says. So that was a beautiful bearish rising wedge. And again, all these lines here, that was created back also in April of 2024. And just look how well we traded. Once we took it out, we back tested it, got rejected, and then went down. Then we had it, once we hit it here, we bounced, and then look what happened when we took it out. Again, these aren't after the fact lines. These are lines added well in advance. Support resistance level targets, and we're dancing on this one now. I'm going to pull this one right now down to the recent lows, tighten it up, so that'll show I created that also back in April 2nd of 2024, but I just updated it today, and that's the recent lows we're dancing on. Then after that, probably whatever, I wouldn't short this one now. A lot of the meat's been sheared off the bone. Better fish to fry. Including this one, Morgan Stanley. All right, I'm going to wrap the video up here. We've got 45 minutes left in the trading day. Market's holding above those support levels. And they're either going to defend them and we could rally from here. Again, to repeat myself, we still have the same bullish divergence I pointed out yesterday. It's only bigger now. We had it there. We had a rally. And we had another low. Still very much a divergent low. Maybe this proves to be a little aberration, but again, it's kind of a little bit of a tell right now. It shows that the markets are, there was no follow-up buying to NVIDIA today. And I always say one day doesn't make a trend, so I try not to read too much into it. And again, to keep it very simple, it's almost binary if you want to keep it that simple. Support is support until unless broken. So if those recent lows from October 10th, and SPY and QQQ get taken out, especially if it's a solid break and or even better, a daily close below, then we're probably going here. Otherwise, this market still has a chance to do exactly what it did right here when it did the same kind of, this candle looks like it's twin. And we were short. We shorted right there with perfection at the entry on the breakdown, covered there on T2 on the futures. It was NQ, and the market was able to go to new highs. Maybe it does it again. I'm sure a lot of eyes are recognizing that and thinking that. I don't know, but if we can hold it, sure, it's quite possible. And now we have to take out. That's a big level too, 614, right? That was today's high. It was resistance. It was the high there. We had resistance. So this is kind of bulls win near term. They still have work to do. Kevin or someone on the site mentioned there's a big gap there to be backfilled. Yeah, maybe. But if we take this out and we start going lower, it increases the odds of my longer term targets being hit. That gap may never be backfilled, at least not for years, possibly. So we'll see. All right, guys, I'm going to wrap it up, get the video out to you, and probably the last video of the day, unless anything crazy happens. And otherwise, we'll pick it up tomorrow. You know the levels to watch. This has been Randy Finney with Right Side of the Chart. Have a great day.